Hello from Moted Markets. The Sahura will be with you with the global economic outlook in the weekend ahead, which is going to be the 44th week of 2024, the last week of October. We are getting closer to US election, and in one hand, which is going to increase the uncertainty in the market. On the other hand, after Israel attack Iran, actually we can say that response to Iranian attack, which happened 2 weeks ago, the market tensions going to slow down while getting closer to US election, increasing the tension. So the tensions still high, but less than previous weeks, which is somehow can be the good news for the energy market and lower the price of the energies, which was going on and increasing last week. Actually, we have to wait more and see the Iranian reaction, but generally it seems that until US election in November 5 till November 8, we will not have any specific surprise around. So on the geopolitical front, we had also the BRICS meeting last week. The summit which has been holding in Kazan in Russia. Uh, yeah, since the BRICS is a new unit, something happening new, and we cannot say that okay, that changed the market so much. But union is a new union, but they are going to get closer together. They are going to get more matched together. So in next meetings, probably we will have more from them, and their effect on the market they will have a more effects on the market. But now, for now, we can say that okay, this group is getting bigger than G7. Their economy, their GDP is getting bigger than G7, and we have to take them more seriously. On the economic front, economic data front, in the US, we didn't have much such a big and busy week last week. The main data which we had from it was housing data and durable goods orders. We can say those numbers they were the main most important data which we had. And as always, on Thursdays we had initial jobless claims. As for the housing market, new home sales increased, pending home sales fell again. That was the market expectations actually, because of the previous loan that they got, and this is a higher with the higher rates. There are less buyers for the pending homes, but the new home sales with the new credits, with the new sales condition, they are getting they are selling more. On the durable goods orders front, generally the durable goods orders fell by 0.8%, which was still better than 1.1% expected fall. But excluding transportation, which we call it the core durable goods orders, increased by 0.4%, much more than 0.1% expected fall. But still, it is less than previous months, which is increased to 0.6% from the initial estimates of 0.5%. Generally, the data says that what we had in the durable goods orders, we can say that in 2024, the trend for the durable goods orders, it was positive when we had good retail sales and durable goods orders and sales. Okay. Last week we also had interest rate decision in Russia and UK in Canada. In Russia, interest rate increased to 21%, while the market was expecting 20% to see as the rates. In Canada, on the other hand, happened what was market expecting 50 basis point rate cut as the inflation is falling on one hand, and also economic growth slowing based on the recently published data that we had in Canada. In Europe, we had PMI numbers. Generally, the PMIs we had, they were negative, less than expectations. The only German economy in both PMI numbers and economic estimates, they performed better than estimates generally. And in China, which week started with the surprise from China, and interest rates for 5 years loans, which is usually using for home rates for mortgage rates fell. They caught that by 25 basis point. Market was expecting 20 basis point rate cut. Same thing happened for the 1 year loan prime rate, which fell down to 3.10%, down from 3.35%, while the market was expecting to see only 20 basis point rate cut. Generally, China trying to support the market, trying to give a positive emotion to the market and support the buyers, especially the support the Chinese consumers to buy more, to sell more, to spend more money. Well, we have to see that what will happen, especially at the first stage for the domestic demand in China. In the week ahead, it's going to be a huge week. Oh, I have to forget to say about the earnings then before going to next week. The earnings last week, they were amazing. And in the week ahead also, we are going to have more earnings with the Google or Alpha, Meta groups, with the Amazon, Uber, Visa, McDonald's, Pfizer, too many other companies to watch. It's going to be a huge week for earnings as well. Generally, we are expecting a little bit positive numbers in earnings. On the economic data front, also, which is going to be the huge week, in United States, we will have GLTs and CB consumer confidence on Tuesday. We are expecting both positive data from both of them. On Wednesday, we will have GDP numbers from United States in one hand, and also there is no, that was going to be, yeah, we will have a GDP and PC price index, core PC price index, and core PC price index for the third quarter. GDP for the third quarter and PC price index for the third quarter. After 3%, the GDP growth in second quarter, we are expecting 3.2% GDP growth to see the 3.2% GDP growth in the third quarter as well. After second quarter's positive data, which followed by slowly weaker than expected first quarter. But generally, the second quarter was good, fine, and we're expecting the positive data for the third quarter as well, which is going to be the initial expectations for the third quarter. PC price index also going to be published for the third quarter, and we are expecting to see slower number for the inflation, PC price inflation, which is supporting generally the holding the current most probably. Actually, let's say that on Wednesday we will have this for the third quarter. Market will not have probably the big reaction to these data, especially while we have the Thursday and Friday with the two other very important data. On Thursday, we have PC price index, personal income and expanding data for the September, which is going to be more important to be watched than compared to third quarter's PC price index. Generally, we are expecting the income and expendings to increase by 0.4%, and we are expecting to inflation for personal spending inflation and core personal spending inflation, both of them, to increase by 0.2% on the monthly base. These numbers will be confirmed that the inflationary pressure is getting slower in U.S. economy, but at the same time, we're expecting to see the good increasing. The personal income increased much better than personal spending in the last months, and it helped to increase the savings from the saving rate from 3% at the beginning of this year to 5% at the current time, which is going to be saying something positive for the economy. But that I will tell you more about the market reaction on the chart, but generally this is what we are expecting on the data. Friday, we will have NFP numbers. We are expecting to see around 110, 140,000 newly created jobs, which is weaker than the previous weeks, which is slower than the previous weeks, previous 254,000 newly created job. But still, if you consider the horizons that we had last week, we can say that, okay, that cannot be such a bad number. That's why we're expecting to see the unemployment rate to hold at 4.1%. Generally, the data we're expecting from United States is going to be a positive data, not a negative. On the other areas in Europe, we will have a GDP and inflation data. We are expecting to see the inflation around 1.9, under 2%, around 2% and under 2% generally, with 0.1 or 0.2% monthly increase. On the inflationary and unemployment rate supposed to stay at 6.4% unchanged. It's in Europe. In China, we are expecting to see a little bit positive, better than expected PMI and economic activities generally in both manufacturing and the service sector, mostly thanks to the stimulus and stimulus that the government had and the lower rates that they had in the recent months. If we look at them, let's go to see the chart and check, okay, what can be the market reaction to these numbers. Let's start with the Bank of Japan inflation. I forgot to say that we will have on Thursday. We will have the BOJ meeting in Japan. We are having some talks that currently economies still need to support, but on the other hand, there are some whispers about that. Okay, the lower rates for longer time is going to be more dangerous for the economy. So most probably we will have a current rates unchanged at 0.25%, currently unchanged, but central bank can give a signal about the possible rate cut in January and February 2025. That can be supportive news for the Japanese yen. So, and also at the same time, the currency market expecting to see some movements from the central bank in to get involved in the currency market by the central bank and the government. So that's the ideas that we're expecting to see a little bit stronger yen in next week. On other markets, on cryptocurrency market, let's say that, and then go to the US dollar. And the cryptocurrency market getting closer to the US election, which means more doubt on what's going to happen. You know, the markets already priced in the Republicans' wins, which is positive for the currency market, for the cryptocurrency market. So we are getting closer to the election, which means more uncertainty, and this uncertainty can pressure on the cryptocurrency price. So we are not expecting any positive week for the cryptocurrency, especially for the Bitcoin. Same thing happening in the stock market. While we are expecting a little bit better than market expectations reports in earnings reports, Q3 earnings reports, but at the same time, uncertainty around the election can hold this pressure. And in other hand, the better than expected economic data that we're expecting to see in a week ahead, which can increase the percentage of holding the current rate to more than 11%. That can be transferred or translate as dovish tone or dovish statement from the from the U.S. Central Bank, which is not going to be a positive, less dovish or more hawkish actually, or that can be translated as negative sentiment for the stock markets. So, but at the same time, as I told, we are going to have a better than expected earnings report. So generally, we're expecting to see holding the slight downtrend in the week ahead, but it's going to be more volatile with the positive earnings that we're going to have. Less tensions in the Middle East after Israel response to the Iranian attack, that can be the positive news for the energy market, which is going to be more stable market, and it can hold back the oil price to increase more. At the same time, we're expecting a little bit better than previous month's economic data from the China, which is going to be positive for the prices. So that's why we are not expecting to see more increase in the prices, oil prices, but falling prices also will not be such a big will not be such big movements in the downtrend, but we are not expecting to see higher prices most probably. Same thing probably will happen in the gold market. So gold will have more reason to have stable, something like stabilization at the current levels. So most probably gold price will be around 2,700, 2,720 to stable itself around 2,000, the 2,700 level before start going higher. So for the gold also, we are not expecting such a positive week. Same thing happening most probably for the US dollar. US dollar also with the lower tensions in the Middle East and the uncertainty in the stock market in general in the market. We will not have a positive data or positive week for the US dollar index, but at the same time, this increasing uncertainty, especially about the election, will not pressure the US dollar price more lower. So most probably we'll see US dollar index around 103.50 and 104.50 around these areas. This is generally the market expectations and outlook. If you had any other question, do not hesitate to write in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye-bye.